Good morning, guys. How are we? We are on Big Bar 33 here on NQ. We're 2 minutes out from the close of 33, and I'll tell you what. I'm watching this bar. I think I may have a setup I gotta put on here. Good morning, guys. How are we? Ro, Gamma, Cheryl, Poker, what's up? How we doing? How we doing? Well, we gotta rush on in here today because we have a potential opportunity here on bar 33. So I'm watching this. I'm a minute 37 out here, and I will have a big stop limit buy ready for the bulls if I can get a nice clean close here out of bar 33. So that's what I'm paying attention to here. ATR currently is 60.7, which is quite a healthy ATR. Obviously, you know, we had a pretty big sideways range from bar 3 through, I suppose I'd probably call it bar 14, though you could classify those as two separate ranges. In hindsight, I'd probably draw it as one. Obviously, from 3 to 8, that in and of itself was just a brutal range on its own. Obviously, you're not looking at too much opportunity between bar 3 and bar 8. If you weren't taking a lot of trades in there, I would reconsider what you were looking at between 3 and 8. Also, you could say through between, I'd say 10 and like 14. Well, 15 as well. All right, 38 seconds. I like this bar. Ten seconds out. Stop limit buy is out. Place him for the rollover. Bulls roll over. Take it. Boom. And they will. I am filled in a buy. That is a long position here on Nasdaq futures. All right. Stop is set. We're ready to rock, man. ATR just dipped a bit here down to 56 on that bar rollover. That's okay. I'm not worried about it. Now, ATR so far here today, by the way, ATR, that stands for average true range. When I say ATR, just think volatility. Okay, so what it means is it's the average range in points of a 5-minute candlestick, okay? So we peaked out at about 85-ish here today, right around 10 o'clock Central. Down to 58, but I'll tell you what, this time of day, 58 is still quite a healthy range. Bull stepping back in, trying to wick us back upside here. Let it do its thing. All right. We got about 2 minutes left here on bar 34. The ATR is 59. So my target here is the conversation kind of starts for me here at a full ATR. So these bulls have a whole lot more work to do here for me. By the way, guys, I know a lot of you have already been hitting it, but Apex has that 250 legacy account sale. You can get a 250K eval with code BIG, B-I-G, for $17. So go hit it, man. But I know all you guys already know. You've already been hitting it. Do you guys like the 250s? All right, so ATR is sitting right about, 60. Okay, so I gotta move my stop now. Up here to 93.50, ATR rollover, down from 59 to 55, that's okay. Stop is moved underneath the new signal bar as bar 35 takes out the high of bar 34. By the way, if you're newer here, you can see the bars are numbered on my screen. We're currently on bar 35. That is the bar count from the New York Open. There you go, bulls. Set my coffee down here and get ready, huh? Because we've got an ATR of 55. I'm 33 points in the money. And I'm driving manually. Big Richard says, got my 250K, code BIG, up $2,000 today, my man. Tremendous. Now, if these bulls could keep me pushing, I got an ATR 56. Oh, there you go. Beautiful. Beauty. Keep that moving, bulls. Ooh, 1 point. ATR now 58. Oh, give me a fill. 60 points. Let my copier flatten. And we are flat. Beautiful, beautiful ram trade. So, that trade there, I got long on the close of 33. Moved my stop on the close of 34. Up beneath, my initial stop was right beneath the wick low of 33, right? Moved my stop on the close of 34. Right beneath the wick low of 34. Took profit here on 35. Big, big trade. That's tremendous, man. We love it. How we doing, guys? Good morning! That'll wake you up. If you're not already, though you might be asleep from the trading range action here this morning, you're not anymore, man. 2.5 minutes out. ATR 59, call it 60. DK, OM, News, Czar, good morning. How are we? So yeah, that trade, you know, damn near textbook RAM continuation. We even got a stop move in there. So that's a very, very good example of a RAM continuation trade. Of course, that's not the only type of trade in RAM, but it is more of a backbone setup for me, for sure. Now, as we come up here, you know, we've got this region here. You could classify this as two ranges, sure. Or you could call it one big range, right? We know, though, this area here, this is a big range. Okay. So, as we come up into that region, you know, I'm not as excited about the stop hunt of the wick high at bar 4 as I would be if it was a bit of a harder curl back, which you guys have seen me do a whole bunch of times if you've been here a while. If you're new, hang out, you'll see it. You'll see it eventually here. All right, 65 seconds, and we'll get the close of 35. See this wick back? Bulls are hesitating. Canada says, lost on the 16 break and lost on 23 break. Now back to break even on this one. Yeah, that was a good trade. 16, I will tell you, that's the first bar after closing after a stop hunt on the wick low of 1. Okay, I see why you took it, but I tend to avoid it for that reason. All right, we got 36 here. Whole bunch of nothing on 35, so... You see on this bar here, this last 5-minute candle on NQ, again, these are Nasdaq futures that I'm trading currently. That's a huge wick. Okay, so that is what the opposite in my head of a clean close. 33, yeah, there's a small wick up top, but it's nothing in comparison to the size of the body. So I got long on the close of 33, moved my stop on 34, took profit on 35 up here, or somewhere in this region, right? 35 on the close there, that's not an opportunity for me. So now I'm watching 36, about 4 minutes out, we'll see what we get. ATR sitting right in the mid-50s, 55. So watching 36. How we doing, guys? How we doing so far today? Hope we're all doing well, man. What a trade to kick off the stream. Very, very nice. Again, perfect RAM example here. Yeah, someone in chat says market cares and then doesn't about war anymore. Yeah. You know, one of the biggest mistakes that day traders make here is concerning themselves way too much with news in general. Trade price action. Okay, price action is truth. It cuts out all middlemen. You can be flat as a trader heading into big expected news and then get right back to it once that news settles out. But as far as black swan events, that's a risk that we accept as being part of the market. Of course, as day traders, you're less exposed to it anyway. But you're going to see what the market reacts or how the market reacts to the news, regardless if you're watching price. Okay, so I would not spend all that precious mental capital concerning yourself with actual news headlines when the market tends to have a mind of its own. How it reacts to that news is not necessarily what you would expect. And if you just focus on price action, I think you're going to have a much clearer look, a much more clear, I should say, look at what you should be doing regardless. So bar 36 here, 90 seconds out. Let's pop back in. All right, 30 seconds here. Watching that wick high of 35. All right, we're going to get an inside close here out of bar 36. Inside the wick of bar 35, that is. So, not watching 37. $37 looking pretty good here. Big bull pump here out of 37. So I gotta tell you, I mean, coming back up into this sideways trading range region, this bar here is already exceeding the average range of the last 10 bars in its own range. So we're just getting up through what's called the ATR, right? Sitting at 59. And we'll watch how this guy closes. But, you know, again, I'm not the most excited ever about a stop hunt here at the wick high of 4. Just because it was part of that big sideways range rather than more of a hard curl, like the stop hunt of the wick low of 1 was, right on bar 16. All right, minute 50 out. Till the close up a big 37. All right, I'm going to get long there for a good reward to risk because this is a very nuanced trade. I'll explain. Place that at 68. I want to be a part of this. And the reason is because if 37, bar 37, could get up and close up here anyway, I would want to skip it just because of this mess back here, this sideways range. But when you get this big momentum, I'm looking for any reason to get long. But I can't if 37 closes way the hell up here. So the reward to risk here is tremendous. The probability, of course, takes a hit because of that, but I want to be a part of that there. If I get stopped, we'll move on and watch how 38 ends up closing up. Here's the rollover into the open of 38. And we'll see what happens here on 38. Holy shit. There's some volatility, huh? There you go. ATR 57. One R here is about 28 points, by the way. That quick little influx got shot down pretty quick. All right, I'll cut it there. Let my copier get flat. And that's going to be a small loser in comparison. Let's keep it pushing. We got bar 38. We're 343 out. And we'll see if this guy turns into a sideways range. All right, we got 3 minutes here left on big 38. Yeah, a bit of a head fake there on bar 38, so that's all right. That makes me wonder if we're entering just a big sideways range here. ATAR is still holding out to on to 59, 60-ish, actually 60 now. So the probability of just going straight sideways, luckily, is a bit lower right now, which is good. right. Minute 25 out here. Gotta love it, man. We look to be having a little bit of trouble as we head back into this region, the sideways range region. Yeah, we had a headline from Trump there that caused that volatility here. That I don't want to say that wicked us out, but you know, the truth is the truth. He said, "Not sure I want to make a deal with Iranian leaders. Let's finish the job." So that caused a little bit of volatility. You know, look, I feel like I just talked about this, right? This when you're exposed to the market, there's a little bit. I don't want to call that black swan, but there's levels to this shit, right? So you're exposed to little headlines like that, in your favor and against you. That's just part of the deal here. And since it's 50-50, we're able to work through that. And it's no big deal. FOMC meeting minutes, 2 o'clock Eastern here today. Are they going to make things choppy here in the Nasdaq futures? So the thing with the FOMC minutes, basically, if you don't know what that is, it's pretty much the notes from the last FOMC Fed interest rate decision meeting. And in a market environment where inflation is the headline topic, like 2022, the minutes do tend to cause a little bit of everyone holds their breath until they drop for maybe 30 minutes out, and then they drop, the market reacts, and then it goes back to normal. In 2026, where the inflation headline has kind of taken a back seat as far as the market is concerned, the hesitation ahead of something like the FOMC minutes, which is not the biggest deal in the world, tends to be less. And the reaction to the actual release, because we're dealing with less unexpected things and less of a breath-holding kind of lead up into it, it doesn't tend to cause as much chop and or volatility as it did back in 2022. So again, FOMC minutes being released today, 2 o'clock Eastern time. I'm just going to trade. I'll be flat for the release, and that's all I'm going to think about. All right, we got bar 39, 340 out. Hey, those of you guys looking for daily payouts, my man, TakeProfitTrader, 40% off, no activation fee, code BIG, B-I-G. If you don't use code BIG, man, you're paying $130 when you pass it. They'll psych you out. You'll pass it, you'll be all pumped, you'll be like, give me my funded. They'll say, $130, big dog. And you'll say, hold on now, little dog. You'll say, I use code BIG, B-I-G. They will say, sir, right this way, your table is ready, we apologize. All right, bar 39, the range on this bar is pretty healthy. I mean, ATR 61, 62, range on 39 here is exceeding that currently. All right, baby. All right, minute 15 out, watching the close up here of 39. Now, you know, I got to tell you, as we get closer and closer and closer to the wick high of bar 4, the quality here starts to diminish. Now, does it diminish too far where I can no longer take it? I don't know, we'll see. But I'm watching this close very, very closely here. The close of bar 39, that is. We got 52 seconds until that happens. ATR sitting at 61, 62. Range on this bar in the high 70s. And we're just about 60, 70-ish points away from the high of day. So it's threading the needle. So I'm watching that very closely here. It's close. All right, stop loom buy goes out. I'm watching that wick high of 37. Oh, you see this? Look, 39 closes right at the wick high. You think that's a coincidence? That is no coincidence. That is a hesitation out of the bulls. Losing confidence in the last 3, 4, 5 seconds of that bar, which is no trade for me. So we watch bar 40. Man, if you haven't yet, by the way, I appreciate you doing so. Hit like on the stream. Or dislike. Or dislike, big dog. Do what you gotta do. Tremendous teaching moment here, by the way. You see bar 40 and bar 39 coming right into the wick highs here, up at high of day. Up here, the wick high of 3, 4. Wick high of 4 is actually the high of day. We had a sideways trading range here. Okay, basically call this one big sideways range. If bar 40 can stay relatively small but close clean above the wick high of 39, I have room for a bullish, which means buy, continuation trade. Okay, based, you know, when compared to the risk I would need to put on, which would be the wick low of that bar, bar 40. If it grows much more or closes inside the wick high of 39, whether it's a doji, a small bull body, or a bear body, then I gotta hold off. Because it's one of the more of those nuanced trades, but if it threads the needle, I want to be involved. So let's see if it threads the needle. 50 seconds out. Watching bar 40 here. Let's see if we can thread the needle. All right, stop limit buy goes out. Get that ready. Watching that wick high of 39. Inside close, you see that? Hold off, bar 41. Watching. Now, bar 41 here could still thread the needle for me. I may end up putting a trade on here on 41. If anything, it would be to the buy side, the long side. But I'm not quite there yet. $245 out. 41 not looking too bad, man. Watching it very carefully here. All right, minute 20 out. Let's see what 41 here brings. Again, I'm watching this carefully. I'd like to keep it a small bar with a clean close. 23 seconds. Come on, bulls. Hold us up. Let's swallow up that wick and keep it just about that size. ATR sitting 57. Again, ATR, that's the average range in points of a 5-minute candle here. So I'm going to get a stop limit buy ready just in case I need to place it. In case the bulls decide to do their job here. Yeah. Ugly. Wiki on 41. No trade. Watching 42. You see all this struggle up here toward the high of day? The closer we get to it, oftentimes it's really common, the lower the volatility the movement gets. Okay, so we're 325 out. I'm watching bar 42 here very carefully. It's the 42nd bar labeled on screen since the New York Open. All right, 42. Not too bad, bar 42. I don't mind that. Give me a nice clean close. Give me it right above the wick high of 41. Couple of points. And then I can kind of, I would look at that as sort of threading the needle for what I need here to get long, which means enter a buy. Minute 5 out. All right, I'm getting ready here, 30 seconds. I need bar 42 to close right about in this region. Would be tremendous. And then I will use what is called a stop limit buy order, which you place above the market, and it triggers me to get long if the next bar can pop through the close, or the wick high, I should say, of this bar. So let's watch. Place him. Close just outside. So I'm going to leave that order there. And now again, this will only put me in a buy, which means getting long, if the bulls can take out the wick high at bar 42 here. I don't want to participate if they can't. And I'll leave that order there for about 25 seconds here. Total. Which means about 6 more seconds from right now. See those bears holding off? That's why I use stop limit entries on the vast majority of continuation trades. I don't want to be a part of that. Had you hit that with a limit order or a market order, you'd have been a part of that dump off. We don't want that. The bulls didn't prove themselves, so I don't want to be a part of it. All right, watch the next bar here, bar 43. Okay, so we got about 2 minutes here on bar 43, and it's doing nothing, which this is really common, by the way. If you ever see a move like this, where you get kind of a pop off the open, a big sideways trading range, you could almost call this 2 sideways ranges, right? But realistically, I would probably draw this as 1 big range. Okay, and then you get rid of the middle. Simplify. Don't overthink these lines. The more you overthink it, the worse the worse look you're gonna have. By the way, side tangent, when I'm trading by myself, not on stream, I don't draw any of this shit. I just kind of look at it and I know it's there. When you see a pop, sideways range, fade, and then this sideways range, by the way, also very common to get a sideways range before a big reversal. The big traditional V shape is the less probable outcome, right? You usually get a sideways range before the reversal. And now we're up toward the top again. It's really, really normal to see a slowdown in volatility rather than just a quick takeout of that wick high of 4, which is the high of day. Now, if this was a harder curl, we didn't see this range, it just curled backside hard, I would look to treat that as, I'd be much more excited about it, I should say, looking at it as a stop hunt. Okay, but it's part of this big range. So I expect I was talking about it down here. We're probably going to see a slowdown in volatility, maybe even a range. And if we take out that high, there's likely to be some hesitation whether or not we do take out the high, rather than a traditional stop hunt look. Like, see the opening bar here, the first bar of the New York session? How bar 16 took it out as a nice stop hunt? That's because it was a much, we popped higher and it was a standalone level. There wasn't really a trading range around here. This was kind of in the middle of the whole day's range at that point, and then 16 dumps through, reverses hard, and then continues. Okay, seeing this slowdown, especially midday here, is really normal. So the ATR is 52.53. It wouldn't surprise me if we see that ATR dumping off into the 40s, maybe even into the 30s. ATR, again, average true range. That's the average range of a 5-minute bar ahead of the high of day. Or if we do take out the high of day, it wouldn't surprise me at all if we take it out and then kind of slow down and go sideways while the market figures out what to do. Okay, so I know it's easy to get really, really excited to just get long here thinking that, oh, this thing's going to pop 300 points in 15 minutes. Usually, that is not going to be the case, and I think you're overestimating the aggression the bulls have looking at this big sideways range, even though the high of day just kind of peaks out of there. Again, not a traditional stop hunt type look. Worth being aware of because this kind of look happens all the time. So watching 44... All right, 220 out here until we see the close of 44. You can see 44 coming in with a little bit of spice up toward the high of day. Again, it's really easy to get excited. And probabilities. First of all, you always got to think in probabilities rather than certainties. The probability right now just does not support an immediate pop through 4. And then, this is part of what I'm saying, another 250-point run. Usually, you're just going to get some hesitation. We already saw so much of it here. But, maybe 10, 20% of the time, you might get that big just, okay, we just take it out and keep going. And then you got to get on board because it's clearly a trend continuation pattern at that point. This was already a bull trend. We already took advantage of that, bought the close at 33. Question, they say, bro, why does the market go up? Is it news related is really the question. Look, a lot of you guys, you really overestimate. You see the market do something and you think, okay, because logically what you're saying, by the way, or thinking makes complete sense. But you're thinking too rationally, and all beginner traders do. The market is going to do what the market's going to do. And over time, you learn that news releases, for example, You have an earnings release. Different type of news release, but a great example. And let's say they beat. The logic in your head would say, well, it should shoot higher, maybe 5, 10, 15, 20%. And it depends how good they beat, right? Yes, that's logical. But in news releases in particular, the real gold lies in the future guidance. So a lot of times what you'll see, and this happens to every beginner trader who's buying and holding stocks or even trading the futures around a bigger tech news release, for example, earnings release, they'll beat, but the guidance will have a hint of insecurity or negativity, and the stock will tank because AI reads it all instantly and then tanks the stock. And everyone's like, well, they beat. Why didn't it go up? As you go deeper and deeper into trading as a career, as part-time, ideally full-time, right, is most of your guys' goal here, you're going to learn that it's just a lot easier, helpful, and more effective to just watch price action. Understand when news is getting released, but you should also understand that the market does not move based on the news necessarily. It moves based on the news mixed with the already existing market outlook on that particular topic. So you can have a positive thing hit as far as news, but if it isn't as positive as the market assumed it would be, that is now seen as bad because the market priced in the assumption that it was going to be better than the good thing ended up being. Okay, so as day traders, it is so much easier, quote unquote, to make money and make money consistently if you forget about it, understand the schedule of news, okay, but forget about it, put it out of your head for the most part, as far as what does it mean. Again, understand when it's coming out, but as far as what does it mean, you're gonna see it more clearly if you forget about the headline and just look at the price action, because the market will digest it for you, and you need all your mental capital saved up to actually watch what the price action is doing, because that's what you're trading. Direct to the price action, cut out the middleman. So you see what I'm saying here? Bar 45 now, sideways range. It's no coincidence, man. ATR now dipping below 50 here. This market doing exactly what we talked about, going sideways here ahead of the high of day. Bar 46, just backfilling again, going sideways here. Relatively predictable that this was going to happen, and here we are seeing it. So we'll continue to watch here. The further we go sideways here, the further we fulfill, I think, that necessary new range up here toward the high of day, and then which way do we go from there? It's effectively 50-50. Okay, just straight up. I know, I wish it was 80-20 one direction as well. But we're here to trade the probabilities. That's how you're going to make money. That's how you're going to make a career out of this. So you got to be honest with yourself. It's basically 50-50, which is great because I don't care which way it goes. Once it breaks out of here, I'll just trade the direction I need to. Well, ATR is sitting 47.48. Watching here. Tom says, what's up, Nico? Past 10 Apex. Code big, my man. And 5 Tradeify evals today, brother. Good work. We love it. We love it. Tremendous. Now you got 15 fundeds in the stable. What you gonna do with them? What you gonna do with them, man? 15, that's plenty. You can do some damage with 15 fundeds. Tell you what. All right, we got big 46 here. About 30 seconds out from the close. 46 heading up toward a test of the wick high of 44, therefore the high of day, which is the wick high of bar 4. And we'll see if the bulls can actually gain enough confidence to pop us through there and hold it. That's the big question right now. You see those bulls? Already these bulls hesitating here a bit. As if it was unexpected. We talked about this on bar 35, I think, man. We are now on bar 47. Alright, hey, don't you go anywhere. I'm watching you. Back in 2 minutes. right, what's up? So my cursor here is the high of day, approximately. Okay, so bar 47 here is attempting to make a push through. That would be the first bar to close outside of that long-lived trading range from this morning, which means that on 47, I wait for 48 and I'll watch 48, and 48 may as well, or may I should say, be my end up being my signal bar. So we'll watch 48 here. Yeah, so you see this hesitation out of bar 48 on NQ. That hesitation is why I don't take 47 on typically in situations like this. So we'll watch 48 here, see how 48 closes up. We got about 355 out. All right, minute 55. We got big bar 48. I'm watching 48. Minute 20 out. All right. Now, if bar 48 is able to close as a nice clean bull body, meaning not too much wick up top, then I will be entering a buy, means getting long, using what's called a stop limit buy order. Thirty seconds. All right. Stop limit buy goes out. 8 seconds. Place him. Bulls are going to roll it over. See if they take it. Risk on this trade is actually going to be pretty tight. Less than 1 ATR if the Bulls take it here to begin with. Hesitation here out of the Bulls, 8 seconds. Oh, baby, and they will. All right, I'm sitting long, which means I am in a buy position on NQ futures. Risk is managed below the wick low of bar 48. Actually, that needs to be it. There we go. All right, everything's set. And now I let it do its thing. I accept the outcome and I move on. ATR, meaning average range of a 5-minute bar based on the last 10 5-minute bars, is 45 points. There you go, Bulls. All right. Get these Bulls stepping in. Now, 1R on this trade is about 34 points. 1 ATR is about 45 points as it currently sits. That could change. I'll tell you what, quite a bit of hesitation here out of the Bulls. It's all right. It's all right. Let this trade do its thing, man. we've got a new 5-minute bar, 49 rolling over. Oh man, into big bar 50. ATR is down a bit, down to 41.42 region. Come on, you bulls. We don't have time for this, man. Taking all day. Chat, the 1 minute is in a trading range. Yep, every time you get a, or I should say anytime, you get a doji or two back to back on a 5-minute chart, especially a 15-minute chart. If you trade a 10-minute chart, yeah, same thing. You're gonna have a sideways range look on a 1 minute, oftentimes a 2 minute as well. we got 50. Whole bunch of nothing on 50. Risk is managed beneath the wick low of 48, by the way. Into bar 51. Question, lately you've been trading later on in the day on YouTube here. Is that because you find more success later in the day? Or is your other trading taking precedence? I build my streaming schedule around my trading schedule, not the other way around. I do not build my trading schedule around my streaming schedule. Okay, so no. The afternoon, in fact, for most traders is going to be the slightly lower performance time on average, which is typically the case with me as well. Just because you get lower volatility, right? Makes sense. All right, cut it. And moving on. Let my copier get flat here. All right, we're flat. Let's keep pushing. All right, watching the close here of 51. A little bit of a pullback here out of the bears. Well, now, I want to see if they head back down into that sideways trading range. All right. Now, rather than looking at this as a huge reversal right off the bat, I know it's easy to do so. I'm looking at this as a potential soft bull channel. Now this, you guys know, in soft bull channels, I'm looking to get long in the lower third of the soft bull channel, as long as I can make sense of the risk management, which is a key point that a lot of people tend to ignore, on small to moderate bear bodies in the lower third. Right. Well, what's up, guys? Let's check in. How we doing, man? How we doing? Hope you guys are doing well. Question, they say, man, how do you keep such a level head when taking a loss? That's the part I'm struggling with most in trading. Okay, so a lot of people, and this is kind of, I mean, it sounds ridiculous, but I kind of thought of this, or I didn't think of this, I thought this way in the early years. And a lot of people, they'll tell you that the psychology mastery of trading is just, you didn't spin around enough in the mirror and repeat to yourself that you are profitable before you came into the office. That was what it was, wasn't it, big dog? The only way that you're able to not care, I know a lot of you guys, you'll see me take a loss, and you're like, man, it seems like he doesn't care. I don't want to lose an individual trade, but I don't really care whether I win. You also see me I'm not getting hyped on a winner. Okay, the same way I'm not getting all sad on a losing trade, because the longer you do this, the less of a piece in the overall puzzle one individual trade becomes. And the longer you do this as well, the more of a backstory you have that you're able to look back and say, oh, I have proof that when I just follow my methodology and do what I do and do a good job and perform well, that I get what I want, which is profitability. So one trade, even if the number, feels big to you, it's all relative. If I win, I don't really care much. If I lose, I don't really care. Now, I would love to win 98% of trades that I take. The only way to do that is to trade with a 1 to 100 reward to risk ratio, which is ridiculous. And we wouldn't do that, obviously. Right? So how do you stop caring about losing? You get a track record that when you do what you know you're supposed to do, you get what you want, what you're here for, which is profitability. And you're like, Nico, how do I get the track record? The only way to get the track record is to brute force discipline for a few weeks. Pick a methodology. I don't care what you trade. Pick a methodology, brute force discipline. If you break a rule, guess what? You're starting over. And I'm not even kidding you, in 2 weeks of perfect brute force discipline, you will look back and no matter what your performance was like, you will say, I am fucking proud of myself. I am so fucking proud of myself. I didn't break a single rule in 2 weeks. And guess what? When you look at, first of all, that in and of itself is a track record that you can look back on and have confidence in. But when you look back at your performance, you'll probably look at it and say, shit, I've never performed that well ever. And if you don't, guess what? You still have the action of discipline to lean back on. You just have to tweak the methodology that you're trading, whatever it may be. The longer you do this, the more success, or what I should say is proof you have to yourself, not to anybody else, but the more proof you have to yourself that, hey, I can do this, I have done this, and when I follow what I know I'm supposed to follow and don't do stupid things that I know are stupid things and don't break my own methodology, don't break the rules that I set for myself, not only do I have more self-respect, but I'm also able to zoom out and look at the bigger picture. So when I win, it's like, okay, next trade. When I lose, it's like, all right, next trade. That's the secret, guys. It's not... I mean, if you want to spin around in the mirror 15 times instead of 12, be my guest, but what I just said, that's what it is. You guys having a good day, man? Hope you're having a good day. Let's pop back in. Take a peek here. Bar 52. Chat, green on the day. Passed 3 of those 250K Apex Legacy evals for 17 bucks using code BIG. Obviously, that deal, by the way, at Apex, the Legacy 250s with code BIG, B-I-G, if you didn't put 2 and 2 together, it's obviously a 4th of July sale. So if you don't take advantage of that, I question your loyalty to the United States. Just saying. It's 1776, the 250K legacy account, code BIG. Man, 17 bucks. You can't beat it. Bar 52, 2 minutes out. Let's see how this guy closes up. Now, obviously, I'm watching that wick low of 46. Clearly, that's what we're paying attention to here. Which also happens, conveniently, to be the 20 EMA. No, it's not. Okay, guys, it's not FOMC today. Today is just the FOMC minutes. Okay, that's at 2 o'clock Eastern, which is in 11 minutes from now. Okay, so the minutes, you know, it's just the notes from the last FOMC event, and in 2026, it's not a big deal. It's not a big deal. You'll get a little bit of volatility, it'll die out quick, and then we'll be back to normal trading. What move do you expect in FOMC? It's 50-50. I don't care what move happens on FOMC. I'll trade the aftermath. It's not FOMC, it's FOMC minutes. So the move is just going to be a little institutional volatility. If anyone's, showing you that they're taking big directional bets on the FOMC minutes, they are literally gambling. Like, no bullshit, they are just gambling. Which is fine. If you like gambling, man, have at it, but not my thing here in the market. If you like gambling, do it away from the market. The fucking opportunity here is too big. It's disrespectful to see people using the market to gamble. You want to gamble? Go gamble on the fucking World Cup and waste hours of your life watching the game, biting your nails, hoping you win $100. The rest of us will be here taking advantage of the opportunity of a lifetime. All right, 10 minutes. Well, 9 minutes really out. All right, we got less than 3 minutes here on this bar 53. Reminder here, FOMC minutes dropping in about 8 minutes. So we'll let that guy clear up. Okay. Is anyone in a position right now? Who's sitting long? Who's sitting short? Who's flat? I am flat. We've got FOMC minutes here in about 5.5 minutes. That will be dropping. right, 4 minutes out here till the close of 54. On the close of 54, that's this 5-minute bar, okay? That's when the minutes will release. We'll get a little bit of volatility. Direction will be 50-50, so we're not worried about it. By the way, in the meantime, while we're waiting, if you want to load up on the Apex Legacy 250K deal, 17 bucks. Code BIG! B-I-G, baby. Go hit it. Go hit it. We got a few minutes here until this clears up anyway. Few of you guys sitting long, few of you sitting short. I'm actually very curious because this curl over is looking very nice. So let's, we'll throw the wrench of FOMC minutes into the mix, let that settle, and then if we can continue this curl over, I'd love to be able to short this thing. But I gotta get a setup in order to do so, of course. All right, heads up here. Minute 53 out from the FOMC minutes. All right, here we go. 15 seconds out. Again, don't expect craziness. If we do get craziness, it means something highly unexpected was said, which doesn't typically happen in the minutes. They would have released that at the FOMC event. Here we go. Look at that. Yeah, the minutes, there's not too much going on here in 2026. As far as things that are relevant in the minutes release. So we'll give it a second, see if the AI is reading the release, catch anything. We're getting some headlines here from the Fed, right, in the minutes. Majority saw risk high inflation. I'm sorry, the majority saw that the risk is high, that inflation may affect expectations. No shit. Officials saw the labor market remaining stable in the near term. Sure. Some participants welcomed a review of communications, tools, and practices. Most FOMC members cited possibility inflation could stay high due to AI. Sure. All officials supported leaving rates unchanged in June. Not unexpected. Don't overhype this shit, guys. It's scary. I know in the early days, these news releases can be scary. It's no big deal, man. The minutes are nothing. At least not in 2026. Now in 2022, if you were trading back then, they were a big deal. But now they're nothing. So let this volatility clean up. Headline here from the minutes. In such scenarios, almost all of the participants indicated some policy firming would likely be warranted. We already knew that at the last FOMC event. They were already pricing in basically immediately upon the FOMC release and then talk afterward, a more hawkish environment. Okay, we saw basically, at least half of the FOMC members, which probably means basically all of them, saw a more hawkish outlook moving forward, which if you don't know what hawkish means, it's the opposite of dovish. It describes monetary policy. Dovish is more relaxed, let it do its thing. Low rates. Hawkish is raising rates, kind of constricting the policy a bit more. Okay, so obviously hawkish environments, the market doesn't like that, even if it is what's best for inflation. All right, guys. Hey, don't go anywhere. 2 minutes. Be right back. All right, what's up? We are 4 minutes out from the close of bar 56. Man, if you haven't yet, I appreciate you doing so. Hit like on the stream, man. Helps out tremendously. And I do appreciate it. Or hey, or dislike, big dog. Do what you gotta do. Whatever lifts you up on a Wednesday, dude. All right, ATR down to 46. So, all right, if we're looking at this, now that FOMC minutes are out of the way, I'm looking at this and I'm wondering, are we going to see this become a thing? I gotta tell you, through the midday here, ATR holding on to 46, that is not bad. I don't mind that ATR at all. Again, that's that red number bottom right of your screen here. That says 46.08. That's the average amount of points that the range is on a 5-minute candle based on the last 10 5-minute candles. So, okay, we've got high of day up here at the wick high of 49. Now this range in terms of width is over 100 points if it does become a sideways range, which the longer we go here, the more it is looking like. Now with an ATR 46, it's wide, but it's not extraordinarily wide. When the average range of a bar is nearly half the size of the range. It's really not that wide. So there's not a lot of room for continuation inside of the range that there would be if the range was 100 points and the ATR were more like 23, right? So, I'm going to keep an eye on that wick high of 49. And, of course, the wick low of 54. 80% of breakout attempts will eventually fail, by the way, if this does turn into a more developed sideways trading range. But eventually we'll likely move away from this here. All right, guys. Hey, I appreciate you joining me here today. Hit the like button on the way out. I'll see you guys back here tomorrow, man. Have a good one.